When I'm looking for high quality dividend stocks, there are very few that check all the boxes for me. Today, we're going to cover my favorite pick right now and go over a few reasons why I personally think they are worth a look. My name is Andrew, and while I'm not a financial expert giving financial advice, I do like to make videos on investing, so make sure you hit the like button and leave a comment. That being said, let's talk about why Realty Income is my current favorite dividend stock. When looking for a dividend stock to add to my portfolio, my first two questions are always, do they have a history of increasing their dividends and are they entrenched in their sector? Realty Income passes both of these questions with flying colors in my opinion. They have been paying monthly dividends for over half a century and they've been increasing those dividends quarterly for over 25 consecutive years. They are a REIT or real estate investment trust, and their tenants include big names like Walmart, Dollar General, and CVS. I don't think any of those three tenants are moving out anytime soon. Realty Income's strategy is pretty straightforward. They rent to major retailers and other types of tenants that grow reliable incomes and have steady cash flows. They have over 12,000 commercial properties under long-term leases and have well over 1,200 individual clients. So they're incredibly diversified with those 12,000 commercial properties. Their occupancy rate on those 12,000 commercial properties is an astounding 99% as the making of this video, and you can really start to see why they are able to reliably grow that amazing dividend. One thing I noticed today is most of you watching this video are not subscribed, and it would totally make my day if you did. On a more serious note though, let's talk about that amazing dividend that Realty Income has been paying out. The current annualized dividend is sitting at $3.06, and that represents a yield of 4.87% at the making of this video. Realty Income's dividend growth rate over the last 10 years has averaged over 5%, with the most recent quarterly increase being 5% alone. And this is a bullish sign for me, as in this higher interest rate and higher inflation time, they were able to increase their income substantially. If they can maintain high occupancy over the next few years, I think they are going to come out of this recessionary time incredibly well. With their experienced management team, I believe they are going to do incredibly well at maintaining that high occupancy rate and making smart acquisitions. I think Realty Income is even more favorable right now due to real estate being an incredible hedge for inflation. As inflation eats away at the value of the dollars we earn, Realty Income's portfolio will also be increasing with inflation, and they will be able to raise rents at a higher rate, which means they're able to earn more money month over month, year over year, just like we saw in their most recent quarterly dividend increase of 5%. Recently, I am sure we've all heard or talked about the commercial real estate crisis that is expected to become a much bigger deal as the year progresses, and I want to speak on why I think Realty Income will be able to navigate through the coming years better than their competitors like Simon Property Group, ticker symbol SPG, which is one of the largest REITs out there, or specialized REITs like Ventas, ticker symbol VTR, which focuses on primarily healthcare properties. First off, Realty Income has an incredibly conservative financial risk management, and their conservative approach focuses on a low leverage ratio and a very prudent risk management. Long-term leases have built-in rent raises with their tenants, especially the likes of big box stores, Walmart, CVS. These will add resilience during market downturns and reduce risk in economic slowdowns like we're currently experiencing. The majority of their tenants are entrenched in their local areas, and Realty Income focuses on these types of properties. It gives them a nice level of security in these difficult times. Their dividend track record is also something we need to consider. As I said earlier, they have been paying monthly dividends for decades, and within that time, we have experienced multiple downturns on our economy, especially highlighting the 2008 financial crisis. And in that time period, Realty Income was able to increase their dividend every single quarter. One thing I really like about Realty Income is they are well recognized for their ESG commitments, which are environmental, social, and governance. You can see what they say about this directly on their website. Realty Income is committed to conducting our business according to the highest ethical standards. We are dedicated to providing an engaging, diverse, and safe work environment for our employees, operating our business in an environmentally conscious manner, and upholding our corporate responsibilities as a public company for the benefit of our stockholders, our shareholders, clients, colleagues, and community. Not many companies seem to care about ethics and working sustainably these days, and I think it is really nice that Realty Income actually cares about these practices, and I think it's something that has helped their amazing track record of success and will serve them well into the future. As we've seen so far in this video, Realty Income is truly a special company. They've increased that dividend for 25 consecutive years quarterly. Not many companies can say they've done something like that, and Realty Income continues to do it with what seems like absolute ease. The people they lend to are entrenched in their communities. I mean, let's bring up that example Walmart one more time. Is a Walmart in your community going anywhere? No, they are entrenched and they're locked into long-term leases where the rents are going up every single year. That's how Realty Income is able to increase that dividend every single quarter. They have high quality tenants and they raise that rent over the long period of time. If you've made it this far in the video, thank you so much for watching. Consider leaving a like and subscribe, and I really appreciate your support, guys. That's all I have for you today. I'll see you guys in the next video. Thank you so much for watching.